Hi, everyone, and welcome to Mish's Market Minute. This is this week's chapter, week of February 1st. And last week, I covered 25 random stocks based on the plethora of stocks that have reported. So I thought, why not stick with that theme and do that again today? So we're going to go through the earnings of the week so far of this week. I'm recording this on the 4th. We've had a few things report after the fact, so that'll be interesting to see. And of course, we still have a couple of more, but basically, I'd say the bulk of the earnings for the week is done. So we should be able to get a good blueprint and a good actionable plan. So again, I picked from this time, I went back to healthcare, pharmaceuticals, solar, there should be a comma there, industrials, FAANG, tech, financials, and e-commerce. And since y'all like to look back, here is the symbols that I cover. The ones in parentheses are the one that have reported. Actually, now when I'm recording to you, we'll get the update on that. Otherwise, you can see here Amazon, Google, BABA, Pfizer, Exxon, et cetera, et cetera. I don't have to read them all. It'll be obvious as we get going. So now let's do that. Okay, so let's start with, I think this is probably where I left off with last week was AG. So interesting, you can see this was the target of the Reddit kids. This wasn't on my plan, but as I'm looking at it, somebody actually drew a rocket ship. I just thought that was so perfect. It looks even better in GameStop. Let me just show you that because it was the most fun thing I've seen today on Twitter was this, where you had like the engine, the rocket, the engine, and of course, this is either going to go into oblivion or it's going to come back and shoot off again. It'll be interesting to see, but I have no skin in the game nor plan on having any. All right, so let's start though with what we are planning to talk about, which is Amazon. And Amazon, to me, is probably, well, it's incredible, really, because considering that they had an amazing earnings report, it peaked here in September, hasn't even gotten anywhere near there. And in the last 6 months, it's really only put in about a 7 or 8% performance. It's actually the worst performing stock in the NASDAQ sector. And of course, what made it so obvious to us was the fact that this went negative in the momentum after this peak right here. It couldn't clear back over that 50-day moving average. So it's actually been in negative momentum all this time. Now it is leveling off a little bit, but not by very much. So right now, again, we still have a divergence where the price is above the 50 and the real motion indicator is below, and it's still slightly outperforming our benchmark at the S&P 500. I would be more inclined to be a seller of Amazon than a buyer or completely be a side. So when we have these type of situations, generally what we try to look for is a confirmation between price and momentum, which means that I would be a seller, obviously, if the price confirmed under the 50. Maybe you could twist my arm to buy if we get the momentum back over the 50 and the price stays there too, and we have a relatively good risk. But when you're talking about a stock that's trading at 3,331, it's actually, I mean, what most people probably couldn't do very much, maybe buy a share, but this does move very quickly. So that may not be the worst thing in the world if you can afford to do it. And if you go short, I would probably recommend options and not going outright. Not that I think that the Reddit kids will target this as a short squeeze anytime soon. The next one, kind of the same situation, although in a little bit better shape, is Alphabet. This had also incredible earnings, just incredible. But this one actually had no negative momentum, but now you can see the momentum is positive and there's no divergence, which means with the inside day that we had on Thursday, the 4th, this could go higher. More importantly, what you have now is a gap, and it's a breakaway gap because it was a gap to new highs. That's an official breakaway gap. Breakaway gap means that it literally breaks away from all of the former price action onto a new high. So you do not want to have that gap filled. So that means this should not break down under 1949.37 to be exact, which is the high of the gap. And so if you wanted to do this, I'd probably not even risk that much. I'd probably risk the low of the earnings day right here at around 2013. But again, you're talking about a very, very high flying stock. And as far as I'm concerned, maybe this has more potential, maybe not. It's just not something that I would be necessarily interested in right here. We had talked about Microsoft last week for the same reason. BABA also reported. Now, of course, you've heard me recall Jack Ma was missing in action and now has emerged and is playing nicely as he should. And so we're seeing that reflected here, and it had a decent report. So we're now over the 50, but our price is much stronger. We don't necessarily have a divergence, but we do have at least the price outperforming the momentum at this point. And of course, you can see here, if you look up the chart from a longer term, we're right into some little bit of resistance here up around 271. So if you were interested in playing BABA, I would do one of two things. That I would either wait for some kind of a move lower, maybe somewhere around 260, so you can risk under the 2 moving averages here, or I would wait for it to take out 271, and then I would probably keep my risk more at around 264, 265. Next one is Pfizer. We're going from the giants to the minis. So Pfizer, has been in the news a lot because of the vaccine situation, and yet it reported earnings and hasn't done very much. Some people think this is a great buy, and so I decided to put this on the list. It is sitting right on, excuse me, the 200-day moving average, and you can see that it tried to break it today, but it held. Look at our momentum is just god awful here. So we'd want to see some kind of comeback here in momentum. And there is a divergence in that this is under the 200 while this is above. So you definitely have some time to see if this thing is going to hold. Pfizer is a very difficult stock to trade. However, it does pay a dividend, which is why a lot of people like to look at it. So maybe in terms of price, the simplest thing to do would be to buy it here over 35.30 and then risk to under here 34.27, so about $1, which would make sense. And or wait at least till we see the dots click up a little bit and that the momentum starts to gain. And I still kind of like that area right there. Next one also reported this week, which was Exxon. And Exxon was a stock that was beat up for a very, very long time. So now you can see it's come back. Momentum is looking better. The stock price is looking better. With XOM right now, the magic number really is around 45 that it has to hold. So you're not that far away. I would probably say that if it can hold around 46 or comes down to around 47 to 48, that would be one opportunity. Otherwise, at this point, when you're running into this resistance here from in January, you probably need to clear about 50, in which case then you could take a higher risk and possibly use a risk somewhere around these levels or somewhere around 47. So about a $3 risk to see if this can get going. The reason why this is interesting and one worth looking at is if you take a look at a weekly chart here, through that 50, yeah, you have resistance on the way up here at 53, then at 54.20, and you have a little gap to fill here to 55. So, you don't want to risk too much. Maybe you can get $5 or maybe you can get more. Maybe this is the point now where the oil companies are finally bottomed out. A lot of them, as I had mentioned to you a few weeks ago when I did a whole bit on renewable energy, are getting into renewable energy, including Exxon. They have to. That's the future. Okay, the next one is also, well, actually, I'm pivoting away from that for a second into the transportation, and that's UPS. Also extremely important because right now, look, you're under the 50, under the 200, so you have a divergence in that you're over the 200 but under the 50. Hasn't been performing that well. This has really been reflecting the lower demand as we came out of a holiday season that was relatively disappointing in terms of definitely in the brick and mortar retail, and people waiting for their stimulus checks. So this would be an interesting buy if, number one, it starts to show some leadership against the SPY. Number two, it can hold up here momentum and start to come back. It doesn't have to necessarily clear, but you definitely want to have two closes over that 50-day moving average. Next one, we're going back into the oil, and this is ConocoPhillips. This one in some ways is even better than Exxon because it just now, Thursday, cleared the 50-day moving average for the second day in a row, which means now we have a confirmed phase change back to bullish. And the momentum is just now eking there too. So there's no divergence, and the leadership is starting to show like maybe could catch up. So this would be one. You have a nice risk here. You have a couple of choices. On a longer term risk, you usually want to risk to the low of the day it cleared the major moving average. So that would be 41. Or you can just simply use the moving average itself and have a risk, say, I'd give it a little room under 42. And just see, maybe even Friday when you hear this might set up. This could be an interesting situation. And also, since some of these oil companies are worth looking at on a weekly chart, let's just take a look here. You can see that we still have a well, actually a recovery phase because it's back over the 50, but a negative slope on the 50 week. But nonetheless, it looks to me like we've got a pretty good wall of support here at 40. And same situation, if you can get in somewhere around 44-ish, and it can get through 50, you might continue to see a relatively decent move up. These aren't buy and hold trades. I just want to mention that. These are really just situations where you can catch some money with a relatively tight risk. Now, totally moving away from that, this is Ferrari. Ferrari was doing really well up until right in here in December. Since then, it hasn't done very much. Well, I'm not really surprised considering, except for the uber wealthy here, people aren't running out and buying new cars in general, let alone Ferraris, and they're looking at electric cars. So this is definitely its own niche market. Nonetheless, what I do like, and that's why I don't mind showing you this, is that the last time we were at this low was November 3rd. So here is February 3rd. That is exactly 60 days. When we make a new 60-day low, which we did here because it took out, well, not quite. The low, it almost did. It's close enough. I'd say 60 days close enough. It made this new low and then it popped up. So that means now that if you look at the bodies of these two candles, you actually have a line here at 200. And if we just go back with my eye here, here's 200 and these two dots right here. Here's 200 and this low right here. And here's 200 right here based on the body of the candle from the day before and the body of the candle today. So that gives us a situation is if you are so inclined, forget it, it's been a well underperformer and the momentum stinks. But if you just want to see if something holds 200, and if it moves up over the high of 201.84 or 202, literally for $2, you might be able to see if you can get a move back up to 210 or maybe even up to the 50-day moving average. It's a shot. Again, I'll let you know if I see something that I think is one of my favorite plays, which, by the way, like last week, I said, I'm going to write this down, Valero. Well, not only did we write it down, we've traded it and we're making money and we're almost really actually close to a profit target at this point. So yeah, if I tell you I'm writing it down, it means that I plan to do it too. So far, I haven't seen anything that I'm going to say I'm writing it down, but it's good anyway to look at things because everybody trades differently. Now, Match.com, people are using it. I mean, some people are using Tinder, and there's a new IPO coming up, by the way, called Blossom. Is that what it's called? It's Bumble. And Bumble's going to be another dating app IPO. So that could take away some of the thunder. In fact, I was talking to my goddaughter, who's 23 years old, and she told me that nobody really uses Match anymore in her generation. But nonetheless, here we are, clearing the 50-day moving average and right into the resistance that we had a couple of days ago. And since it reported, obviously it reported better. The momentum is but coming back, it started to show a little leadership again over the SPY. And if you get a move and a close on Friday at 146.70, that's your 50-day moving average, you would have a good risk to under this low here at 141 and give it a go and see if this thing can continue to move up. People are definitely using online dating, as it's really hard to meet anybody anymore because we don't go anywhere. So it's from a practical standpoint. Now this one reported this week, and I just thought it would be interesting to take a look at it. It's McKesson. McKesson had been doing GMOs, and a lot of people were against that, myself included. And so this stock was under pressure for a long time, but it's made a tremendous comeback here, and it's got an interesting chart formation after the report. its momentum is starting to improve. It's starting to show some leadership. And you can see now that we have an established base right here at the 50-day moving average at around 178. Now it's trading a little bit higher, but these stocks all have tremendous volatility. So I would say if you're willing to look at it around 178, and we can get through some of this recent resistance right here, which would really be somewhere around 186, and it can hold over 186, then you have about an $8 risk. And on a weekly basis, this can go higher. In fact, let me just take a look at this on a weekly basis because I want to see some history here. If we go back from, let's say, 5 years, yeah, we're right up kind of where we were or close to it about 5 years ago. So this definitely has some potential to the upside. Now let's go back to our daily look. On to the next stock is in the solar energy. This is Solar Winds. This is a stock I used to trade. I haven't traded it in a while. But you can see it really kind of underperformed, especially when you look at some of the other solar stocks. But nonetheless, it reported it's still in a bearish phase, which means we have a unique opportunity here to look for some kind of a divergence, which means if the momentum clears over the 50 and the price doesn't, that's something to keep an eye on. And look at this, it's still showing some outperformance, which is hard to believe against the SPY. So I would say right now, the simple thing is to wait to see if we can get some kind of a phase change or a move over 1795 for a couple of days. And then this could be something that could play some catch up. Who knows, get a short squeeze play? That's possibility too. Another tech company I followed for a while and then lost track of was Viavi. And Viavi actually now also has done pretty well. And let me change this to a 2 year. It's too much information, too little information. If we go here now, we can see that Viavi has done extraordinarily well. But again, the momentum is not necessarily following the price. I'm not really interested in this, but I just thought it would be interesting to see if there was anything here based on the earnings. And yeah, we look like right now we're right here at around $16, $17, some resistance. Maybe this could go on. I would take a look. I know they're in the telecom space, and we've been into Viacom, which I had told you about a long time ago, which made a ton of money. So it's possible this thing, now that it's reported, can play some catch up too. Now in the 3D space, people keep telling me about Pitney Bowes, Pitney Bowes, Pitney Bowes. Pitney Bowes reported and has come off tremendously from the high. You're getting closer here to the 50-day moving average and some decent support anywhere between 7 and 8. So considering it's still holding the 50 here and it's had this big correction, this would be one that I might be interested in playing against 8. So if I weren't already long 3D printing, 3D systems, I would say, yeah, this one is definitely one I would write down, hold against 8, and you want to really see it now maybe clear back over 950. All right, moving along, we had PayPal report. Now, of course, the whole Bitcoin deal helped this go up tremendously. Excuse me, PYPL. And so you can see what happened here. So this is another breakaway gap to new highs. So what do you do in this? Some people are momentum traders and just love that's what they live for. And remember, if you want to trade like that, you just don't want to see the gap filled. So you always know what your risk is. Your risk is just a little bit above of the old highs or above 255. So that's something you may want to keep a track on if you think that this can go up. And considering it's tied at Bitcoin, I wouldn't say that would be so crazy. QCOM was disappointing in earnings. So you can see here, look at that momentum. I mean, the momentum was negative long before the price was. Did this momentum feel anything? It just felt that the velocity was waning, even with a big price here. And of course, now we've got the confirmation, or actually a new divergence, because it's sitting here on the 200 and this is far from. So this is a good example of not buying when you have negative momentum. I don't see any particular trade I would recommend here. By the way, I found out Sony is going to change its symbol to SONY, which would make a lot of sense. It would identify it. But this also, look how great this did. This gapped up inside day. Again, if you're a momentum trader, this is a perfect opportunity to get into this stock with a relatively low risk. You want to make sure this holds above 105. And where could it go? Breakaway gap? Who knows? Next one is one that I traded years ago and haven't looked at in a long time. And this is Boston Scientific. So we're back into the health field here. And the Boston Scientific stock is also interesting because you had a death cross, but yet it held the 50-day moving average and never really broke down on the momentum. You see why this momentum is so important. So this is my moment to give you the daily pitch. If you want to buy this plugin, it's available to you. Not only has it saved us so much money from getting into things where I see a divergence, it has made us so much money when I see the positive divergence and I just have to wait for the price confirmation. So here you've got it. And you've got the 200-day moving average here at 37. So if you wanted to take a look at this one in the medical space, this would be another one that would be interesting to me. And my risk would probably be under this low here at under 36.30. So that's not too bad. Humana, another one in the healthcare space. This one, just the opposite, reported poorly. So let's see what happened here. Let's look back at the momentum. Did we get a clue? Well, the momentum never matched. See, when you had the momentum here, it really showed no divergence because it didn't have like a higher momentum or a much lower momentum when the price went up. But again, look at the negative divergence that happened when it broke the momentum before the price did. So that would have been a reason to never get into this one. So now what do we want to do? Well, first of all, you can see here, we are under the zero line. So at the very least, you'd want to see this get back over the zero line. And if you like to look at those 60-day highs and lows, this made a new 60-day low here and was followed on Thursday. This is important. This 60-day low here at, and you should write this down, 373.57, confirmed as potentially tomorrow with an inside day today, if it takes out 388.55. It would mean that it made a new 60-day low, digested the move with an inside day, and then confirmed that it's a potential bottom with a really good tight risk. So that's something to be looking at as well if you believe in this stock. Now, it does look a little bit heavy, but that doesn't necessarily mean very much. Let's go to another one in that space, which is Biogen. And Biogen also very interesting. Look at this bar. There's, these are the rumored days. These pharma stocks can be really profitable and really treacherous. But what I like about this one, more so than what I just showed you in Humana, is that it's holding the 200 here on the momentum, even though it's below it. And here's your 50-day moving average, which tells me right now that if we can get some kind of a level of some sort of support right here around 260, and it starts to get back through this 200, it's already telling you that the momentum is not nearly as bad at the price, and then you could possibly get your way into that, maybe using, obviously at that point, a higher stop, whatever the low is of the day, that it goes back and clears back over that 200-day moving average. Okay, we've got a couple left here. eBay did surprisingly well in the earnings. And there you go. Another breakaway gap. I should have called the segment Breakaway Gap Day on earnings. So these breakaway gaps, though, a lot of people, like I said, I personally am not this kind of trader. I'm more of a value trader. But as long as you know what you are, but that doesn't mean that there aren't so many people who make a ton of money on momentum trading. These are the type of momentum stocks you want to buy. When they have a breakaway gap, they hold that low, and they can blast off higher. So here you go with eBay. Of course, you still have a little bit of a negative divergence here in momentum because we haven't cleared the 200 here. It might. And look, you're starting to see some good price leadership there. All right, these are the ones that reported this afternoon, but I haven't even seen how they've done yet. So we're looking at them together. Slab. This is Silicon Labs. This is a semiconductor. The semiconductors actually were they did pretty well. They came back from the lows today. And again, right now, we didn't do anything crazy here after the earnings, but we have 139.50 to 140 as a pivotal area to be looking at for a much shorter term trade. And if it takes out this highs, let's just take a quick look here at the weeklies. When I'm not familiar with a chart, I like to look back on time when I can't see it all. It looks like to me like this is basically new highs, certainly new highs over a multi-year. So that's another one for you momentum traders. There's lots here to choose from if you're a momentum trader. I gave you the one that I like if I was more of a value trader, and that was going to be the Pitney Bowes situation. All right, Toyota also reported. Toyota is like the largest car company. And you can see that after a big decline, it popped up yesterday and it's done pretty well on the earnings. It's sitting here giving you a good opportunity. You want to talk about a phase change tight to the moving average? This is another one you might want to take a look at, because really basically you've confirmed back into the bullish phase. The low here was 146.85. You can use a little bit under that as a risk point and try to get in on Friday if it holds that 146.45, anticipating that you're going to see some catch up here in the momentum and in the leadership. But never rule Toyota out. It is a hugely popular, the most popular car company in the United States. Yes, Tesla fans. And here is Gilead. Now, Gilead was one that was on my outlook list, and I covered this one for y'all back in the beginning of December, saying I was looking, the beginning of January, when I was looking at things that could outperform after being underperformed. You see, more my wheelhouse. Now, Gilead was already a buy down here, but nonetheless, it's not showing you the reflection. After the report here, it's actually trading at 67.05 in the aftermarket, which means it's going to come in here over the 200-day moving average. So I think this is a good opportunity to look at this one, because if this is going to get going, you can see that not too long ago it was trading up over 80. So if you can get in over 67, you can actually use a risk under that 200-day moving average and see where it goes. It's also starting to clear back over the 200 on momentum. So actually, of all the ones that I've talked about, this one is one I am going to write down. Gilead 67, risk 200. See, I told you I was going to do that. Okay, next, two more. A company I've been following for years, they do recycling, is this is called Ball Corp Materials and Containing. Also reported here today. In the aftermarket, it traded down to 88.90, exactly where you see it right here. So at this point, it's under the 50, which is sloping down. I wouldn't do anything right here on the divergence, but I would keep an eye on this as this comes down closer to 81. Might at that point be an opportunity. This is a good company. It's just basically fallen out of favor here in the last couple of months. But nonetheless, interesting to look at because of its recycling abilities. And last is Zendesk, which is one that I mentioned on Fox as a stock that I liked. You can see here right now where it closed. Let me just make sure I get the post market, because this also reported today. In the post market, it's trading at 163, even higher. Okay, so what you've got here is another breakaway gap. So you got a lot of choices here on these breakaway gaps if you are so inclined. Just remember, trading breakaway gaps are great, and sometimes, the law of motion, things in motion stay in motion. Just make sure that you use that risk under the low of the gap, or at least above the high of the last day before it gapped. And this way, right away it's going to hold. And then whatever your risk, try to at least double that before you set some kind of a profit target. And if you don't think you can do that, then don't get into that trade. Okay, so hope this was helpful to you, gave you a couple of ideas. Again, my favorite one out of all of them, for me, my style would be Gilead. In the meanwhile, you all have a great week. Thanks so much. Happy day, and thanks for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.